Hey guys, in this video I'll be talking about the best way to trade futures. Futures trading strategies, how to trade futures, how to make money from the futures market. Basically, when trading cryptocurrency, the most common way to trade cryptocurrency is trading through the sports market. Yeah, it's trading through this is a futures trading platform on Binance, and this is the spot trading platform on Binance. And spot trading basically means buying coins, cryptocurrencies, and holding them for a period of time and reselling whenever you feel like selling the coin. But then in futures trading, it is very different. The concepts are different. The concept of futures trading is that it is like a contract. It means you are buying you are having an agreement to buy or sell a crypto asset or a commodity at a set future date for a set of price. That is what futures trading is. It's like you are buying a crypto asset. Let's say, for example, you are buying Bitcoin with the intention that Bitcoin is going to go to this price at a particular time. And it has something called the leverage. The leverage allows you to multiply your profits, your assumed profit, because in futures, okay, let me say that basically the difference is that when you are trading spot trading, you are not using leverage. And when you are trading futures trading, you have the opportunity of the leverage, which will make you able to make more profit on your trade, on your futures contract. It's like a contract proposing that a particular asset is going to go to a particular value at a particular time. Then the market is going to give you the leverage to help you make more profit. And the more leverage you get from the market, the higher your profit or your loss. You understand? So that is like, it's like, let's say for example, let's use a cloth for example. Normally, if you want to buy a cloth, you go to the market and you buy a Gucci shirt for $50. Everybody knows that this particular Gucci shirt for example costs $50. And you go to the market, buy the $50, the Gucci shirt for $50, and boom, you are at home with your Gucci shirt. That is a similitude of spot trading. When it comes to futures trading, what you do is that you go to the market and you ask for the price of Gucci shirts, and they say maybe the price is $60, and you say, okay, the price currently is $60, and I don't want to buy my own shirt, my own Gucci shirt for $50 for $60. I am going to buy when it is $50. You understand? But I'm going to deposit an amount so that you buy for me when it is $60. Then we will have a contract that when it is $50, you buy for me. And I'm not going to get an ordinary Gucci shirt. I'm going to get a Gucci shirt signed by the Gucci ambassador in that country. That is the leverage. You are not getting a shirt, just a shirt that other people get for $50. You are having a leverage, like an additional stuff to your own buying, like to your own contract. And that is that the ambassador in that country will sign that shirt. That is the importance of leverage in futures trading. And you get to understand more when we dive into the screen and talk about how to trade futures extensively. Now, this is futures trading platform. This is futures trading. The first thing you want to do on the futures trading screen, this is where you trade futures on Binance. You can trade futures on Binance, on other exchanges, but I prefer to use the Binance exchange. On futures trading, you are either doing two things. Either you buy long or you sell short. Buying long means you are predicting that the price of that asset or commodity is going to rise in value and you want to buy. So once you buy, immediately the price rises in value, you make profit using the leverage. The leverage will let you make more profit compared to people who just buy on the spot trading platform. And the opportunity you have that here on futures that you don't have on the spot trading platform is that you sell short. That means you can have a USDT or any pair you want to use, whether BTC, USDT or anything, any asset you want to use as a pair or leverage on your wallet, crypto wallet, on your futures wallet, and you sell short, predicting that the price of a particular asset will go down. You are predicting when you sell or short, you are predicting that the price of that asset will come down with decrease in value. And once the price comes down, you make profit using the leverage. The more the leverage, the more your profits or loss. Don't forget, crypto is very volatile and it will always be either profit or loss. So now the first thing you want to do on the futures trading platform is to first thing you want to do is to add funds to your futures trading account. On Binance, Binance has varieties of accounts. There is spot account on Binance, where whenever you receive funds, it goes naturally to the spot account. There is funding account used for, let's say, P2P trading. There is margin, there is futures account. So since you are trading futures, the first thing you do is to add money to your future. You can see here this available balance is 000 BTC. So what you do is you can just click on this place to add money to your account and just add USDT. Let's add USDT. So you click here to add funds. Yeah, get good. I already have some USDT here in my, but if for the sake of people who do not have USDT already, you can just click on this place. You move money from, let's say, from fiat and spot to futures. You are moving dollars, funds, or USDT from this place, from your fiat or spot wallet to your futures wallet. Then you just enter the amount you want to move. Okay, USD, you enter the amount you want to move. Let's say you want to move $100. You want to add it to your futures wallet. Just click on confirm and it will add. So you can see here it has already been added. So that's the first thing you want to do. You add money to your trading wallet, futures trading wallet. Then the next thing you do is to determine whether you are using a cross margin or isolated margin. When you are trading futures, you have the cross margin, you have the isolated margin. And the difference is that in a cross margin, let me start with isolated. In an isolated margin, it means that it will isolate the amount you want to use to trade and trade with it. Let's say you want to enter a trade with just $20. If the market goes against you and you lose that your $20, you are only losing $20 that is isolated into that trade. But when you are doing cross margin, when you are using cross margin, it means once you lose the initial amount you are using to trade, you are using to enter a particular trade, a particular futures contract, it will go back to the balance in your futures wallet and put it into the trade. You understand? So it is safe to use isolated margin. That's what I use mostly, because it will only isolate the only amount. Let's say you want to trade with just $10, it will isolate that $10 and trade with it. But if you are using cross margin, once the trade is going against you and you are in loss, and that $10 you used to enter the trade is finished, it will go to your wallet and bring more money from your balance into that trade. The beauty of this, the only beautiful thing about cross margin is that when you lose, when something like that happens, and let's say for after a long time the market comes back and goes in your way, you make profit. But then most times you get stopped out most times. So in this trade that I'm practicing, I'm going to use the isolated margin. You click on isolated margin and confirm. Then this is the leverage. One thing you have to note is that the more the leverage in your trading, the more the profit or loss. So I usually advise that you use a very small leverage, let's say something like 10x leverage. That means 10 times something like your capital, 10x leverage. Sometimes I use less than the 10x leverage. So you set your leverage. You know, I said the major difference between spot trading and future trading is the leverage. So you must always set your leverage and uh, get it right. So let your leverage be low, because if your leverage is too high, there is probability of the futures market stopping you out if the trade goes against you. But one beautiful thing, another beautiful thing is that if your leverage is high and the trade goes in your favor, you are making a lot of profit. But then the most important thing in crypto, risk management. Manage your risk, because the market does not belong to anyone. So I'm just trading here with the a small leverage, let's say the 9x leverage. So now I have set my margin, isolated margin, I have set my leverage. Now let's go into trade. I want to trade Bitcoin to USDT. If you don't want to trade this Bitcoin to USDT, you can always search Solana, you can trade Solana to USDT. You get, you can trade, any other thing according to the analysis you have done. So your analysis will determine what you are going to trade in the futures market. So you can just go with the Solana USDT trade. Don't forget, once you change whatever you are trading here, this one will reset back to normal. So you just go back, click on isolated margin if you want to use that, and confirm, adjust your leverage. Remember, leverage is makes what determines the risk you are taking with the market. So use the 10x leverage, and then you determine, are you buying or going long, or you are shorting, or like, are you buying or going long, or you are selling or going short. So now, for example, I want to buy long. So now you understand, in one of my videos that I mentioned that if you want to enter a trade on Binance, there are different ways. You can use the market order, you can use the limit order, you can use the stop limit order, you can use the OCA order. I'm going to drop the link to that video in the description below. So don't forget to check that video out so that you'll be able to understand the different kind of orders we have and know how to trade with them. Those orders are used both on spot and futures trading. If you are enjoying this video, click on the like button so that a lot of people get to see the video. And you are just joining me for the first time, don't forget to subscribe to my channel and click on the notification bell so that you get to see my videos immediately I drop them. Back to futures trading, we now you must be able to determine whether you are buying at the market price, limit price, stop limits, or OCO. Any of these orders you want to place, you can use them. Then here I will be buying at the market price as an example. So what you are doing is that you click on the size of the USDT you want to trade. Let's say I'm just trading with 10 USDT. You can just put on 40 USDT, for example. If you are trading with 40 USDT, that means 40 USDT is one Solana. You can click on this place to set your take profit and stop loss. And if you don't want to set take profit and stop loss, just uncheck the box. You understand? So then you click on buy long. If you are buying long, just click on it. Then the order is submitted. You can always see the order here. If you want to close your position, you can close your position here. The order is here. You can see the profit or loss, unrealized P&L. You can see the balance. You can see the order. You understand? So then you can use the limit order. If you don't want to buy immediately, You know the market order is for buying immediately at the market price. The limit order is if you are waiting for a price to hit before you buy. So apart from buying long, you can also sell short. You can just sell. You can if you don't want to input the amount here, let me go back to market order. Your market order. If you don't want to input that, if you want to use percentage, you can just click on this place, drag it. You want to use 50% of your capital to sell short, just click on it and the order will be submitted. You can always check your orders you can always check your position here. You can always check your position here. You see positions. Those are the orders you have that is running. But if you use a limit order, you will not have your position, you have open orders. It will be here until that market is like implemented, is initiated rather. So once the market gets to the price you want to buy, the price you set in your limit order, you it will become a position. But if it has not gotten to that particular like price, it will be on open order. So the difference between open order is that open order is an order you open with a limit or stop limit order and the price has not reached that particular place you want to buy. And position is an order that is currently run. You can see that the position is running, the market is running, the leverage is 10x, this is the size, this is the entry price, this is the current price, this is the liquidation price. The liquidation price means that once the market get to this price, I have lost all the money and I'll be stopped out. I'll be liquidated out of the market. So that's the liquidation price. This is the margin ratio. This is the margin, 58 USDT. This is the PNL, the profit or loss realized. You understand? So if you want to close, just click on close position. And another thing is that after you have started your order, you can set your take profit or stop loss by just clicking on this place. You can see you can take profit and stop loss using this. So that is basically how to set a futures trading order. Don't forget, what is more important is you determine whether you are buying, you are longing, or you are selling. That means you are shorting. You determine whether you are using the isolated margin or the cross margin. You'll be able to use the leverage. You determine your leverage and confirm. Then the pair you are trading, you select it here and then you place your trade here. You can as well use the limit order, the market order, the stop limits, and the OCO. And like I said, if you want to know how to use these orders, there is a link in the description below on a video I made explaining everything you need to know about how to set your orders on Binance and other popular exchanges. Then you'll be able to monitor your orders and you can always close your positions. So I just close this one because I only open it as an example. So this is how you trade futures. This is how you place futures trading contracts. If you enjoyed this video, if you got some value, don't forget to like this video so that more people will get to see it. Subscribe to my channel so that you get more content, crypto related content that will profit, like it let you make a lot of profit in the crypto market. And also hit the bell button so that you get notified of any video I post on my channel. Bye. See you in the next video.